Cameron, begin with you. Was this the last move by the Fed, the last hike?
Well, as you heard from Powell, it is still very data dependent, which just means that if we do get a hot inflation print sometime in the next couple of months, then it may not be the last hike. But if the current trajectory in inflation continues, then yes, it is the last hike. We don't think that the Fed wants to take a victory lap on inflation just yet. As Steve Leisman talked about a bit today, that they've been so burned by calling disinflation too soon, which just means that this will remain a market that's hypersensitive to incoming inflation data and probably hypersensitive to good data coming in from a growth perspective, meaning we could still be in this good news for the economy is bad news for markets.
Well, what happens now to the rally? Because the market certainly doesn't seem to be upset by what it heard today. Either the bond market and the stock market might suggest that this was the last one.
Yeah, and what we've seen this year is that the Fed hasn't mattered for markets really at all. We've seen the pricing for the terminal rate go up quite significantly through the course of the year, and we've seen the push out of the start of interest rate cuts, and yet we've seen market valuations continue to expand. You have the S&P up 40% or 20% in its PE valuation, NASDAQ up 40%, which just tells you that the pricing of the Fed's expectations this year really has not mattered for markets. And really what matters more is positioning becoming deeply underweight, moving to be more overweight, things like AI boosting optimism. So really, it is a question for going into 2024 if the Fed, if we continue to push out the start of cuts, if that will matter at all for markets. It remains to be seen.
But, I mean, you've been pretty cautious, right? And too cautious, I think you would have to admit. At this point, are you starting to come more positive on the market?
Well, we have been cautious in the sense that we haven't been expecting the big lead in some of the more speculative parts of the market to be the leaders. As they have this year, you can see things like meme stocks up 70%. We weren't expecting that with a Fed that was continuing to remain tight. Now, we stayed invested through 2022 and into 2023 by focusing on quality, focusing on those names that we want to own for the long run. The question for us is then where do we find value in adding new capital today? Back at the beginning of June, we started talking about how the equal weight index was actually really cheap if you looked compared to the cap weighted index, which was being boosted by just a couple of tech names. So we still find value in pockets of this market. We remain valuation disciplined because we are long-term investors, and that's where we look to things like value, maybe not focusing as much on financials and equal weight in order to put new capital to work.